with us on Trading Hour, and now we're going to discuss something that has been singled out as a bit of a key risk for the market that you cannot ignore, and that is the stickiness in inflation and the fact that monsoons have been deficit. In fact, overall India, so far in the monsoon season, we're looking at an 11% shortfall, and that's the highest deficit we've seen in the last 7-8 years. So that's a fact that cannot be ignored. I just want to quickly run the numbers as well, because the CPI inflation print is expected later today as well. And our CNBC-TV18 poll is throwing up an expectation of 7.08%. Now, that's going to be a lot better than this huge shocker of 7.44% that we saw in July. But it's still well above the RBI's comfort threshold. And RBI has sort of made its intent clear that they want to see inflation coming back down to 4%. So we're a long way off from that mark. So let's take the conversation forward and discuss everything that's at stake over here. We have CRISIL's DK Joshi joining in. Thank you so much, sir, for being with us. Let's start with first where your own expectation is, and then the more critical question. Everyone's trying to figure out whether this food inflation shock that we had, tomatoes, etc., some of the vegetables, whether that was transient or passing. So do we quickly start going back down to, 6% and maybe even below? Or could this get more complicated considering that rain gods haven't been smiling on us in the entire month of August?
I think what is very clear is that the vegetable price spike, that is transient. I think if you look at the month of August, in the first half, the food inflation was high. I think even vegetable inflation was high. But towards the second half, particularly tomato prices completely normalized. So I think in that sense, July, August will be the 2 months which will see substantially higher inflation than the tolerance band. I think in September, you will see inflation come down because by that time, the vegetable inflation would have corrected. So having said that, we are slightly above the market expectation of close to 7%, 7.08%. I think it's largely because we have a slightly higher expectation on food inflation, and which, as I said, will correct going ahead. Now, the critical question is that what happens in this environment where monsoons are not normal. They are, as per the data, it's 10% below normal as of yesterday. So that is going to have an impact on mostly on the food grain part, not so much the vegetable. The food grain essentially is your cereals and pulses, which are witnessing high inflation. And I think India is trying to import some of the pulses, etc. But I think there is a clear pressure point on pulses because the sowing itself is lower. And then how the El Nino does play out, I think that's still a question. I think August was very dry.
Sir, I just want to come in over here. You said that you're above consensus on today's expectation, today's print. CPI inflation for the month of August. What is your expectation that you're going with?
We have an expectation of 7.6%, which I think
7.6%. That would be an increase over July as well.
Yeah, I think that's because on the basis of food inflation trend, that's what we are getting. But the critical issue is that there are two halves of August. The first half, which is higher, and the second half, which is lower. And I think this will correct in September. I think that is more important, I think, rather than what number you get today. Whether it's going to come down sharply in the month of September or not, I think we are saying it's going to come down sharply.
So then what could the September numbers look like? August is 7.6, according to your own estimate. What would be the glide path lower?
Well, we haven't done the precise forecast because you need more information, but I think it could be somewhere around 6%, I think. We haven't done the number crunching as yet. I think this is a broad estimate.
Okay, but it could come down to 6% as early as September, October, right? According to your own early estimates.
That's right.
Mr. Joshi, in your assessment, how much of a worry could a deficient monsoon be? Because this comes on the back of 2 good years of monsoon, right? So reservoir levels are still pretty okay. The problem really arises at a crisis level is when you have 2 droughts, successive droughts. So in that context, do you think we will be able to manage even if this year turns out to be a bit deficient?
Well, I think we can manage deficient years. I think provided they are not too deficient, I think. And this year is a little different from the last 4 or 5 years because this year there is El Nino playing out, which gave you August rains at 123 years low. So I think, so fingers crossed on how the rest of the September plays out. The IMD has said that the rains will bounce back. They will actually, rains are important in rest of the season because the yields of the crops that have already been sown, I think, depend a lot on availability of irrigation. Also on, I think, the rainfall. I think the main areas where water has been very scanty throughout the season is Bihar, Jharkhand, Karnataka, and some part of West Bengal. I think the rest of the nation, on the average, has got close to normal rainfall. I think there are these pockets which are extremely deficient, and then some parts of the country have also got excess rain. I mean, more than what is required, which is also not very good. So I think so I don't see a major hit to agriculture output, but yeah, I think inflation is a more sticky issue, and I think because here imports also are involved, and as I said, the rice overall sowing is now back to the normal, but the issue is whether you will get the yields that typically are associated with that kind of sowing. Our sense is that there is some risk to yields, but let's, as I said, keep your fingers crossed, I think, for the rest of the season.
Okay, got that. Mr. Joshi, just one word finally on, the IIP, which is also expected today. What are you expecting for the figure this time? Because, I mean, last year we did see quite a hit come through in certain pockets like manufacturing. For all of the talk of Make in India, there was quite a hit on that front. So what are you expecting on the industrial production front?
Well, we have a forecast of 4.4%. The PMIs for manufacturing are, I think, are reasonably strong. I think they reflect faster growth than what we saw in the first quarter also. But I think for this month, I think we have 4.4%, which is this will be July data.
All right, got that. 4.4% is what you're predicting on the IIP front. Mr. Joshi, it's been a pleasure having you on the show. Thank you for joining us and taking us through that quick preview in terms of what we can really expect from the CPI and IIP print, which are due later today. But with that, it is time for a short break. And as we do that, some important, on the other side, like we've been pointing out, the G20 summit saw the launch of the India, Middle East, Europe Economic Corridor, which of course aims for stronger trade ties and energy flow from the Gulf to Europe via railways and ports linked to India. So what does this actually mean? We're going to bring you all of the details in just a bit, so stay with us.